All right, guys, another week is upon us, which means we have a lot of stocks to break down, charts to go over, earnings to cover as well, because all the companies that we're going to break down today, all the stocks are set to report earnings. So, yeah, jam-packed video. If y'all find value, hit that like button. Make sure to subscribe. And, guys, you might as well follow me on X as well at Stocks Talk Stocks. And don't forget to get your free stocks for Moomoo, up to 15 stocks, each up to $2,000. Just use that link down below or go to StockSurfS.com/Moomoo. Get your stocks, guys. And with that being said, cheers. Let's dive right into the video. So for everybody out there that's been watching the stock market, right, you should know at this point that we're pretty much at all-time highs. The Dow actually just hit all-time highs last week. We have the S&P 500 here looking at SPY. This is about $5-6 away, or at least last week it was at one point away from all-time highs. You can see last week we hit 470, 373. If I zoom in, you guys can see that, which is a 52-week high on SPY. And now let's see, we're about $10 away from all-time highs, but last week when we hit that high, we were about $5-6 away from all-time highs, and Triple Q's all-time high was hit about two and a half years ago. We hit 408.71, and now we're at what, 405 as of last week, and we hit a high of 406.50 last week, so we got pretty much $2 away from all-time highs. So by the looks of it, guys, let's be honest, looks like the markets are about to hit all-time highs by the end of the year. The Dow, the Dow's already there. S&P, the Nasdaq, they're pretty much right there as well. And who knows, man, that could be setting us up for a rocky start to the new year. Who knows? Maybe we pull back a bit in January, see some volatility. I don't know. I mean, the VIX is at pretty much, a 52-week low right now. It's at 1230. I mean, come on, guys. This green's probably not going to last forever. I mean, it's definitely not going to last forever in the short term, in the short term especially. We're probably going to get some rockiness, but as of now, wrapping up the year, it's looking pretty green, and the million-dollar question is, again, will it continue into January, or will we see some selling, volatility, which I have a feeling we might in January, February. I don't know. We'll see, because, again, markets are up so much in just the past couple of days. And forget the past couple of days, past couple of weeks, we're up massively ever since really the end of October, early November. I mean, guys, look, Triple Q's up from 343 to 405. That's about a 20% move in about a month and a half. And SPY's up as well massively, probably not nearly as much as Triple Q, but it's up from, let's see, 408 to 470. It's up about 15%, pretty much, right behind Triple Q there. So what do you guys think? All-time highs before the end of the year? It looks like we're definitely trending in that direction. And just when you thought earnings season was over, no, it's not over yet, guys. We have 5 more companies, well, more than just 5, but we're going to cover 5 in this video that are pretty important if you ask me. So let's just dive into it. Number 1 is FedEx, ticker symbol FDX, which, not surprising at all, at least to me, we're at a fresh high on the 4-hour chart. A lot of these stocks, guys, are trending near 52-week highs. They're breaking out. Pretty much all of these are. As again, the stock market in general is at all-time highs for the most part. So yeah, FedEx, fresh high on this 4-hour chart. We hit 284. We took out the highs from, it looks like, July, August, September, which is great for the bulls, and we're above the moving averages, Golden Cross, all that good stuff. So FedEx is set to report earnings. It looks like here on the 19th, which is on Tuesday after the bell. They're looking to do $4.20 of EPS versus the $3.18 from last year. So EPS will be increasing about $1 year over year, which is good. And revenue, the estimate is $22.4 billion for FedEx. And it's not at all-time highs. Yes, it's at a high on this 4-hour chart, maybe at a 52-week high as well. But the all-time high on FedEx stock is 319, which, if we look here on the max chart with this breakout that we've gotten over the past couple of days and weeks here, now we're taking out the highs, it looks like, from, when was this? 2018. Yeah, early 2018. We hit about 275 on FedEx stock, And now about 6 years later, we're taking that high out, which means the next main resistance here on FedEx is around 305, 306, at least one of them, which was the high from, it looks like, the end of 2020. Then the all-time high is at about 320, which we hit, it looks like, when was that? Shortly after, it looks like mid-2021. Yep, so now we're trading in this range right here. That's what I'm trying to get at, guys, between 280 to about 307. So we have some upside. We have some more upside potentially on this chart, maybe towards all-time highs. Ultimately is where we could be going. So FedEx, keep your eyes on it. Again, Tuesday after the bell is when they're set to report. And we also have Nike this week, guys. NKE is the ticker, which this one's recently been breaking out as well. We're at a multi-month high on Nike stock right now. We've taken out the highs, it looks like, from July, August, which were right around 110. So we broke out of 110, filled the gap to about 115, which is where we double topped, it looks like, here in June heading into July. So we broke that, broke that point as well, 115. And now we're at 120, getting pretty close to the highs from, it looks like, April, which if I draw these out or draw this line out, you guys can see 128 is pretty much where we were in April. So Nike set to report earnings on, it looks like here, the 21st, which is what? Is that Thursday, guys? Yeah, 18th, Monday, Tuesday's the 19th, Wednesday is the 20th. Yeah, 21st is on Thursday, guys. They're set to report after the bell. And again, a lot of these stocks, guys, they're at highs. Well, maybe not Nike, but, Nike's been up a ton recently. They're pretty overbought heading into earnings. Keep that in mind. These earnings have to be very good to sustain the level of where the stock is, especially here on Nike and FedEx as well, considering FedEx is at highs as well. Or, well, Nike's not there, but we're pretty much at the 52-week high or getting near it, at least on the 4-hour chart here, which is the past couple of months. Either way, both of these are pretty overbought heading into earnings, and we got to watch out for it. But either way, Nike set to do EPS of 77 cents versus 85 cents from last year on revenue of $12.31 billion. So keep your eyes on Nike this week. We also have Micron, ticker symbol MU, which, you guessed it, is also breaking out heading into earnings. What else is new, right, guys? You notice this trend? Clear trend going on with these stocks, right? So Micron completely breaking out. It's pretty overbought heading into earnings. They're set to report, I think, on Wednesday. Let me double check that. Yeah, Wednesday after the bell, they're looking to do EPS of negative 90 cents. So they're looking to lose almost $1 versus the 4-cent loss from last year on revenue of $4.23 billion. So, of course, this is a cyclical business, guys, cyclical industry that Micron is in. We're not going to get into that in this video, but that's why their EPS is all over the place, revenue's all over the place when you look at the trends. And, the stock at this point is at fresh highs. Like I said, on the 4-hour chart, on the 1-year chart, on the 3-year chart, you guys can see we're still pretty off when it comes to the highs where we were early 2022, which we hit, we hit about $100, so we're still well off those highs. But who knows, man, by the looks of it, that's where we could be trending, considering the bulls are clearly in charge without any signs of a reversal to the downside, at least based on what I'm seeing. What do you guys think? Let me know your thoughts in the comments. And before we talk about the last 2 stocks today, guys, don't forget to get your free stocks for Moomoo, up to 15 stocks, each up to $2,000. Just use that link down below. Once you open up your account and fund it with at least $100, you get 5 stocks, each up to $2,000. And guys, it gets even better. Fund your account at least $1,000. On top of those 5 stocks you just got, you get 10 more stocks, each of those up to $2,000 as well, totaling 15 stocks. You guessed it, each up to $2,000. So get on it. Use that Moomoo link down below. And full disclosure, that is an affiliate link. It helps out the channel. I appreciate you guys as always. And with that being said, cheers. Let's break down the last 2 stocks, which the first one here, the first of the last 2, is CarMax, ticker symbol KMX, which this one's actually not near all-time highs or near 52-week highs, but it is reversing. It's doing pretty well. It's up 15 bucks per share over the past couple of weeks. Looks like here in the past 5-6 weeks, it's up from what, 59 bucks to about 75 bucks. So it is up $15 or around 25%. So CarMax is set to report earnings. It looks like here on the 21st, which is on Thursday in the morning. They're looking to do 47 cents EPS versus 24 cents from last year, and revenue is looking to come in at $6.36 billion. Not too bad there for CarMax. And again, it's not near highs here, but it is reversing. We are above the moving averages. We have almost the start of a golden cross, which is good. And we also have an inverse head and shoulders here, guys. Let me show you this. Let me pull it up. Boom, left shoulder. We got the head right here. Boom. Then we have the right shoulder right here. I know I butchered that, guys. Bear with me, which means this could have more upside potentially towards, the $80 level, 85 in due time. We'll see how earnings come. Again, anything could happen here with these earnings, guys. And full disclosure, I don't own any of these stocks, and I'm not gambling holding these through earnings, guys. I hate doing that. Trust me, I used to do it. Believe it or not, I used to do it. Gamble and just buy calls or puts or buy a bunch of shares before earnings. And sure, I made money. A good amount of the time, but I've also gotten screwed over many times doing that as well. So for that reason, I don't do that anymore. So full disclosure, again, I don't own any of these stocks heading into earnings, but who knows? Maybe after earnings, once we get the numbers, the guidance, the price action, that could change. We'll see. We'll see how it goes. But yeah, CarMax, KMX, and the last one. And by the way, guys, if you stuck till the end, hit that like button. Let me know in the comments you stuck till the end. And I'm actually curious, where are you guys from watching this video? If you're in the United States, what state are you watching this video from? If you want to let me know, of course. You don't have to, but if you want to let me know. And what country are you watching this video from, or city, whatever, if you're outside of the United States? Let me know in the comments down below. I appreciate each and every one of you for tuning in, watching, as always. So CCL, talk about a stock that has ran up like crazy. This stock back in the end of October, early November, was right around 10, 11 bucks, and now we're pushing 20 bucks per share, guys. This thing's up 70% essentially in the last month and a half, and they're set to report earnings on, it looks like here, the 21st, Thursday morning. And let me tell you, man, this thing is pretty overbought, way overbought in my opinion. And these earnings have to be phenomenal for this to plow through 1950, 20 bucks in my opinion. Who knows? Maybe we do it before earnings in anticipation of earnings. I don't know. But for us to break the highs from, it looks like July heading into August, we're going to need to see CCL's earnings be just unbelievable, which who knows, they might be. But for me, guys, that's way too risky. Again, I don't even like trading through earnings, but if I were to do it, I would not do it with a stock that has ran up 80% in the past month and a half. That's heading into earnings, pretty overbought. That already has gotten a bit, it's gotten a little rejection already at 1950 last week. You guys can see if I pull up this 5-day chart, we got rejected there on, looks like Thursday and Friday. So who knows, man? We might be getting ready for a dump off towards 14, 15 bucks if these earnings disappoint. Totally possible. And of course, we'll wrap back around, during the week when these companies actually report, and we'll break down the numbers. So make sure you guys subscribe. And before we wrap up the video, I forgot to even mention what CCL is looking to do. So they're looking to do negative 14 cents EPS versus negative 85 cents from last year. So they're actually improving massively there, right? On revenue of $5.31 billion versus $3.84 billion last year. So they're looking to increase revenue almost 40% year over year. So the numbers are going to be great, but the $1 million question is that already priced in to the stock? Probably is, guys. It probably is. What do you guys think? Let me know your thoughts in the comments. Hit that like button. Make sure to subscribe and follow me on X at Stocks Talk Stocks, and I'll see you guys in the next video.